After suffering losses due to the sudden failure of the cryptocurrency exchange FTX, the cryptocurrency-focused bank Silvergate Capital Corp said on Thursday that it intended to cease operations and voluntarily dissolve the company. The company decided to close the bank after it issued a warning the previous week saying that it was evaluating its ability to continue operating as a going concern. The company disclosed that it had sold additional debt securities this year at a loss and that further losses mean the bank could be less than well capitalized. As a result, the company made the decision to close the bank. Welcome to Crypto News. Today, we will discuss what Silvergate bankruptcy means for crypto. Stay with us until the end of the video to learn more. Like and subscribe to this channel and hit the bell button to get notified of all the latest updates. Let's jump to the topic. The disastrous results for a company situated in La Jolla, California. The impact that the failure of FTX, which filed for bankruptcy in November after being unable to cover customer withdrawals, has had on the digital asset business can be seen in the case of Silvergate, which is widely regarded as one of the leading banks in the cryptocurrency sector. In light of recent industry and regulatory changes, Silvergate stated that the decision to close down the bank was the wisest path forward. According to the bank, the plan for its winding down and liquidation involves the complete refund of depositors. This week, a number of Silvergate's business partners, including prominent companies like Coinbase Global Incorporated and Galaxy Digital, cut their ties with the financial institution. After the announcement made by Silvergate, the cryptocurrency exchange Coinbase stated that it does not have any client or company cash. But the chief executive officer of Binance, Changpeng Zhao, stated that the firm suffered no damages due to Silvergate. Investors rushed to remove more than $8 billion in deposits from Silvergate during the fourth quarter, which resulted in the company reporting a loss of $1 billion. According to a statement released by the bank, Silvergate has appointed Centerview Partners LLC to serve as its financial advisor and 𝗃𝗏𝗏, Swain & Moore LLP to serve as its legal advisor. Established in 1988, Silvergate made its first foray into the cryptocurrency market in 2013. The bank had also maintained a mortgage warehousing business, but in December, it made the announcement that it would be closing down that division. The bank cited the rising interest rate environment and the drop in mortgage volumes as the reasons for the closure of the company. The Silvergate Exchange Network, Silvergate's cryptocurrency payments network and one of the company's most popular offerings, was shut down by the company 1 week ago. This network made it possible for investors and cryptocurrency exchanges to send and receive funds around the clock, in contrast to the usual method of sending funds via bank wire, which might take several days to settle. 𝗃𝗏𝗏𝗧, the chief executive officer of 𝗃𝗵𝗲𝗏𝗧, an investment advisor that specializes in digital assets, said that the loss of the Silvergate Exchange Network is disappointing, despite the fact that the risks of contagion are minimal because Silvergate has stated that it will repay depositors and has performing loans. However, the loss of the Silvergate Exchange Network is disappointing. He says this is more of a strategic loss of crypto's critical infrastructure than anything else. When contacted about the bank's bankruptcy on Wednesday, the Federal Deposit Insurance Corp, FDIC, declined to comment other than to state that it does not regulate the bank or the holding company. Earlier, Bloomberg reported that the FDIC has been meeting with Silvergate to find methods to avoid the bank's closure. Federal prosecutors are investigating the corporation and its dealings with FTX and trading firm Alameda Research in Washington. In January, 3 senators from the United States asked Silvergate for information regarding the company's risk management and FTX. The California Department of Financial Protection and Innovation, which supervised Silvergate under a state charter, said in a statement that it was evaluating the bank's compliance with financial laws and safety and soundness obligations and that it was working with its relevant federal counterparts. The state of California supervised Silvergate because the bank operated under a state charter. Weekly analysis of the crypto space. After a catastrophic series of withdrawals and an unsuccessful bailout attempt by federal authorities, the cryptocurrency finance industry pioneer Silvergate Bank has crumbled like a house of cards. The bank was known as Silvergate Bank. In hindsight, their most recent effort to strengthen their liquidity by talking to the FDIC, Federal Deposit Insurance Corporation, appears to be more of a last-ditch effort than a way to save themselves. At the time of savings and loans, Silvergate was an industry pioneer and was the first company to identify the potential of cryptocurrencies. Yet, it turned out that the bank looked like a financial zombie that had taken control of a risky sector of the economy. At the end of September, it had more than $13 billion worth of Bitcoin deposits in its kitty, making it one of the largest cryptocurrency depositories in the world. These deposits were deposited in high-yielding, safe assets such as United States Treasuries and other bonds, just like they would be at any other bank. To refresh your memory, however, the most recent year was the worst year ever recorded for both categories of debt, with Treasuries falling more than 12% and agency securities falling over 8%. But, the failure of FTX, combined with a flood of customer withdrawals and the requirement to repay a loan from the Federal Home Loan Bank, caused Silvergate to sell assets before the time when they would have normally matured. As a consequence, there was an imbalance, which led to the bank suffering a loss of more than $1 billion during the fourth quarter of 2022. The crypto sphere is unquestionably going through a challenging time right now. As a result of this news, the value of Bitcoin has substantially decreased, and there may be devastating implications that are still unclear at this time. Nevertheless, there is always a chance for improvement in every circumstance. Who, then, stands to gain from the collapse of Silvergate other than the short sellers who have already cashed in on their positions, such as the crazy George Soros? Naturally, this may also be beneficial to certain other banks. As soon as they saw the first signs of blood in the water, numerous cryptocurrency companies like Coinbase, Paxos, and Galaxy jumped ship to Silvergate's main competitor, New York-based 𝗖𝗵𝗲𝗰𝗍 Bank. This occurred as soon as they saw the first signs of blood in the water. Even if it cut its exposure to the cryptocurrency market a few months ago, 𝗖𝗵𝗲𝗃 Bank still has a chance to come out on top in the long run. Nevertheless, it is not the only one that stands to gain if Silvergate is unable to operate. Even if banking regulators are telling traditional financial institutions to steer clear of relationships with cryptocurrency startups, plenty of traditional financial corporations are still well-financed and looking for somewhere to put their cash. The European Union may be getting ready to capitalize on this opportunity. In contrast to the United States, the European Union has adopted a more proactive approach to the issue of regulating the Bitcoin economy. The Markets in Crypto Assets Act, MiCA, a collection of rules likely to be enacted in the coming months, could offer cryptocurrency companies and financial institutions the much-needed certainty they are looking for. The current financial crisis in the United States could drive even more businesses to relocate their operations overseas. Last but not least, stablecoins stand to gain in some way or another from all of this chaos. Now that Silvergate's internal system, the Silvergate Exchange Network (SEN), has been shut down, analysts at 𝗃𝗀 predict that stablecoins will likely enjoy an even greater level of popularity among traders. Stablecoin trading volume has surged significantly on centralized exchanges, jumping from 79% the previous year to 90% now, significantly displacing dollar-based trading pairs. But, U.S. enterprises that issue stablecoins are also having trouble achieving bank status, and the failure of Silvergate might have repercussions for a significant number of these organizations. The closure of Silvergate is unquestionably a setback for cryptocurrency enthusiasts, but there are still a great many opportunities for financial gain. Whoever can seize the chance with both hands is the only thing that matters at this point. If you made it to the end of this video and are interested in knowing more, in the comments section below, let us know which part of the video you liked the most. We will appreciate your comment and work to make a video on your desired topic with an account shout-out. Please like and subscribe to Crypto News and hit the bell button to be notified of our next video. Thanks for watching.